Hey everyone, welcome back to SecureDApp's YouTube channel. As always, this is your host and host Kunal, and today we are back with SecureDApp Spotlight episode 8. So, what is SecureDApp Spotlight? So, it's a series where we sit down with industry expert and explore the latest blockchain and cybersecurity regulations and everything that comes in between. Real talk, real insights straight from the front lines of Web3 and digital security. So, without wasting any further time, let me just introduce myself. I am Kunal Chowdhury, content and community executive and a subject matter expert at SecureDApp. With me, I have joined by Mr. Nikhil Prasad. So, who is Mr. Nikhil Prasad? Nikhil Prasad is the most promising legal mind shaping the future of blockchain regulations at SecureDApp. Nikhil serves as a blockchain regulation expert and a subject matter expert, playing a critical role in aligning decentralized technologies with evolving legal framework. So, Nikhil will just introduce himself and tell us what we are heading to. Over to you, my friend.
Okay, thank you, Kunal, very much for inviting me. So, everybody, I'm Nikhil Prasad Singh. I am a lawyer and a passionate in the Web3 and the crypto ecosystem. So, today we are going to cover uh, all about virtual digital asset regulations in the Singapore and everything that we will your questions, everything will be answered. So, today we are heading for the Singapore one. Thank you, everybody.
Okay, Nikhil, thank you for the short intro and telling the audience what we are exploring today. So, talking about Singapore, to start, could you just outline how Singapore regulates on virtual digital assets and the licensing requirement under Payment Services Act that we call PSA, and the new Financial Services and the Market Act that we call FSMA? Could you please elaborate on these
Mhm.
grounds?
Okay, certainly, Kunal. And in Singapore, VDAs generally refer to the digital representation of value, okay, including cryptocurrencies and tokenized assets that can be traded or transferred. The primary licensing regime for these assets is under the Payment Services Act 2019. And under the PSA, any businesses providing digital payment token services such as trading, exchanging, or custody of the cryptocurrencies must obtain a license from the Monetary Authority of Singapore. And licenses come in two types. Okay, first is the major payment institution for larger operators, and second one is the standard payment institutions, that is the SPI for smaller ones. So depending on transaction volume threshold, importantly, you will have to decide on what type of license you will have to go through, first of all. And second of all, MAS, that is Authority of Singapore, recently expanded the scope of its PSA to cover a wider range of activities, including digital tokens, okay, such as arranging transmissions of tokens, inducement of buy, sale tokens, and custody safeguarding of tokens. As a result, many activities that previously flew under the radar now require a PSA license if conducted in Singapore. Okay, so beyond the PSA, Singapore has introduced Part 9 of the Financial Services and Markets Act, and coming into the force in 30th June 2025. This new law targets digital token services providing DTSPs whose services are provided outside Singapore. In practice, that means any Singapore-based company or individual offering into crypto services only to overseas customer must cease operations or obtain a FSMA license by June 30. However, MAS has signaled that it will set a very high bar for granting FSMA license and generally will not issue them, effectively forcing them into many foreign-only crypto firms to wind down or relocate. So, thus the combined effort is that almost all significant crypto businesses in Singapore currently, whether serving locally or foreign users, now fall under the strict license regimes.
Okay. Nikhil, talking about Singapore, my concern area is that what are the anti-money laundering and the counterfeiting financing of terrorism's obligations for these virtual digital assets providers?
Certainly, plan these licensed VDA service provided in Singapore are subject to rigorous AML and CFT controls. Okay, So it is designed to align with global FATF standards under the MAS rules. For example, AMS notice PSMO2. DPT service provided must implement full customer due diligence and ongoing monitoring. Enhanced due diligence for high-risk customers, suspicious transaction reporting, record keeping, and adherence to the travel rule for transfers over $1,500. So in practice, this means that collecting and transmitting sender receiver information on large crypto transfers, just like in banking, AMS regularly update these requirements to stay in step with the FATF. In fact, the FATF explicitly requires countries to license and supervise all virtual asset service providers and to apply the same AML and safety obligations to them as to banks. So Singapore was an early mover here, but MAS co-led the FATF work on crypto standard banks. Okay, so in 2019, and these principles are embedded locally as well. So in short, any MAS licensed crypto firm must build a robust compliance program with a strong KYC, transaction monitoring, risk assessment, and reporting, or risk severe penalties. So there are severe penalties if you violate these regulations.
Okay, Nikhil, you mentioned MAS. So could you please elaborate on MAS or a role on in all these virtual digital assets, and how does a regulator engage with the virtual digital assets industry, particularly in Singapore?
Okay, so MAS risk, Kunal is MAS is referred to Monetary Authority of Singapore. MAS plays a central hands-on role in Singapore VDA space as the financial regulator. It writes and enforces the rules from issuing licenses to supervising compliance. MAS scrutinizes every license applicant very carefully, looking not only at financial soundness but also at the or anti-financial crime controls as well. In fact, MS will check things like adverse news, okay, adverse news sanction list and strength of the applicant's existing AML CFT controls before granting a license. So there is a very hand-to-down approach. So it also imposes strict fit and proper standards and on controllers and key personnel. Once licensed firms are subject to ongoing MAS oversight, MS conduct for cause inspections and thematic reviews, and regularly publishes advisories highlighting emerging risks. So, in Singapore's regulator also frequently cooperate with foreign counterparts. Singapore actively participates in FATF's virtual assets working group and shares information to combat cross-border illicit crypto flows as well. So, moreover, MAS issues guidance documents and even launches pilot initiatives. For example, it's a 2020 guidance strengthening AML safety control to DPT service provider laid out expectations after a global crypto incidents. Overall, MS is a proactive, not only licensing and policing firms, but also engaging with research and policy making as well, and to stay ahead of the curve.
Okay. So you talked about regulations, Nikhil. So what happens if a crypto firm violate these regulations, and have there ever been any enforcement actions or penalties we should note?
So, yeah, there is, yes, MS enforces these rules stringently, and under the FSMA and PSA, operating without a license or breaching license conditions can lead to a severe punishment. For instance, new FSMA provisions carry penalties up to 2 lakh 50,000 Singaporean dollars in fines and up to 3 years imprisonment for a non-compliant companies and individuals. We saw that highlighted in AMS recent statements. And in practice, AMS often issues warnings first, but it is prepared to impose fine or revoke licenses for serious breaches. And also, MAS PSA's framework has penalties and civil actions for things like uh, for things for things like it is prepared to impose fine or for things like failing to segregate customer assets or adequate control. And on top of that, AMS cooperates with the law enforcement, Singapore police, and anti-corruption agencies have frozen millions of dollars of crypto investment recent investigations. So involving There have been involved many money laundering and fraud cases. So while MAS hasn't publicly fined as many crypto firms specifically as some Western regulator, it has handed out multi-million dollar penalties to licensed financial institutions. And crypto firms know MAS expectations are high. So recently, MAS has also introduced new regulatory measures. For example, as of October 2023, new rules require 90% of the customer crypto to be held in cold wallets and forbid lenders from staking or lending out retail customer tokens. Firms that fail to implement these or other MAS guidelines risk enforcement action in sort. Singapore set a tough compliance requirement and backs them with the real deal. Fines, licenses, revocations, or even criminal charges can follow blatant non-compliance.
Okay. So Nikhil, talking about crypto, how does Singapore addresses the cross-border crypto nature, and are there any special rules for international activities that Singapore has made particularly?
So cross-border issues are front and center. Crypto is inherently global, so MS has tailored rules accordingly. The core step is FSMA's approach we discussed. Singapore now requires Singapore-based crypto providers to hold a license if they serve overseas customers effectively, covering a cross-border operation from June 25. Even a local digital wallet or DeFi platform that only serves foreign users must be licensed or shut down. Okay, so this closes a loophole where firms tried to bypass AMS oversight by claiming I only have foreign users. MAS has justified this by pointing the higher money laundering risk in such model. So additionally, MS there enforces the FATF style travel rules for international transfers. As I mentioned, requiring originators beneficiary details on transactions over $1,500. So if a Singapore crypto firm sends token abroad, it must cooperate with the foreign exchange by providing identity info. Similarly, incoming transfer trigger checks. The MS risk assessment notes that gaps in foreign AML regimes can increase. Example, if tokens go to an unregulated exchange overseas. So beyond rules, AMS actively works with other regulators. For example, Singapore has memoranda of understanding with major jurisdiction to share AML information and participate in global networks. So it also encourages firms to use technology solutions to ensure compliance across border. So in summary, Singapore closes border through licensing and forces global AML standards to address cross-border crypto activities.
Okay. So let's look beyond Singapore. How do Singapore regulations compare with other jurisdictions like UAE, USA, and particularly Europe or Hong Kong?
Okay, so that's a very good question, Kunal, my friend. There are both similarities and differences in this particular case. So, in general, regulators worldwide are converging on core principles like licensing, AML requirement, and consumer protection. But the approaches are very different. So in European Union, that is the Markets in Crypto Assets MiCA regulation, is often cited as the gold standard. MiCA creates a unified crypto framework across EU member states. It covers a broad set of tokens, requires issuers to publish white papers and require crypto service provided, so-called CASPs, and to obtain licenses and meet capital and governance requirement. MiCA also emphasizes consumer disclosure and risk management essentially. So, like Singapore, the EU mandates licensing and anti fraud measures, but on a wider harmonized scale across many countries. So, the United Arab Emirates has taken further, the UAE has taken a zone based approach. Okay, so Dubai's newly created VARA and Abu Dhabi ADGM free zone impose licensing and ML rules on exchanges and wallet providers. So they too require strict KYC and have guidelines on reserves for stablecoin. For instance, VARA rules, KYC rules demand robust identity checks. In fact, a recent World Economic Forum report that both the UAE and Singapore have comprehensive AML KYC regime for crypto providers. Hong Kong is a different. Okay, it has largely folded crypto into its existing securities framework. Crypto exchanges there must register with Securities and Future Commissions and primarily serve professional investors. Current rule ban crypto trading in and but it may change next year. And Hong Kong has recently begun work on standalone crypto law. As one industry analyst noted that AMS licenses exchanges has DBT service providers under PSA, but uh, under PSA in practice, that means fewer public crypto outlets in Hong Kong compared to Singapore, more openly licensable regime. To summarize, EU and Singapore both require licenses and robust safeguards with AMS, but focusing on agility, EU on fintech agility, and the EU on broad market integrity. The UAE also licenses and emphasizes the AML, often mirroring FATF, similar to Singapore's risk-based approach. Hong Kong currently, through securities law, mainly or for professionals. Each jurisdiction shares a goal of protecting investors and fighting crime, but Singapore's framework is notable for its proactive adjustment to address cross-border issues specifically.
Okay.
Yeah.
So, Singapore is known particularly for fintech regulatory sandbox. So, how does this apply to virtual assets and the startups?
So the AMS FinTech regulatory sandbox has been a cornerstone of Singapore's approach to innovation. Introduced in 2016, it allows companies to test new financial products, including crypto-based ones, and in a controlled environment with some regulatory relaxations. So, for example, crypto startups could use the sandbox to trial a new token launch or exchange with lighter regulatory obligations. So, while AMS monitors you closely, this helps firms innovate without immediate triggering full compliance burdens. So over time, MAS has expanded the sandbox concept in 2019. It also launched the Sandbox Express for master approval, and in 2022 uh, introduced Sandbox Plus, which provides funding and more hands-on support to selected fintech projects. Through these, crypto projects have benefited. For instance, iStocks, now it has been name changed to ADEX, a blockchain-based capital market platform started in the sandbox and later secured full AMS license. So it became a recognized market operator under the Securities and Futures Act. So this shows AMS willingness to nurture DLT-based businesses that demonstrate strong controls and value, uh, while ensuring they meet standards before scaling up. That said, participation is not a loophole. Sandbox firms, while must satisfy AMS on consumer protection during the trial period and eventually graduate to full compliance or exit. Overall, the sandbox approach has given Singapore's VDA ecosystem room to grow and attracting startups by offering guidance and a clear path to licensing while keeping risk within supervised bounds.
Okay, so Nikhil, from an investor or a startup point of view, what are the key opportunities and risks in Singapore's VDA landscape?
So there is very so much opportunities, and risks are also very significant. So first of all, Singapore offers a number of advantages as a crypto hub. Opportunities include access to sophisticated financial market and Asia Pacific network. So startups can tap into a vibrant fintech ecosystem, benefit from MS Tech for the stands, and even use Singapore as a bridge to Asian and beyond. So tokenization of assets is gaining traction under Singapore hybrid financial framework. The clear regulatory regime itself is an opportunity. So investors and institutions tend to feel more comfortable engaging with the projects that are MS licensed and which can unlock capital and partnership that might avoid unregulated markets. Singapore capital is also increasingly open to blockchain innovation, as evidenced by projects like DBS digital assets and trading platforms. So, however, risk remains significant. The crypto sector globally is still prone to volatility, fraud, and technical vulnerabilities. Singapore virtual asset risk assessment highlighted threats such as cyber-enabled fraud, wallet thefts, and ransomware attacks linked to cryptocurrencies. So, regulators warn of pump and dump schemes, illegal online gambling using crypto, and misuse by terrorists. For startups, the hurdle of compliance is also a risk factor. Stringent capital and process requirements can be tough to meet. In addition, sudden regulatory changes, for example, the new FSMA rules, can force businesses model shifts to mitigate these risks. So many firms leverage compliance and security providers. So, for instance, companies like you as well, SecureDApp, they offer smart contract audits. So, with their Secure Watch, Solidity Shield, these KYC ML solutions helping project build trust and satisfy MS scrutiny. The bottom line for investors is that Singapore rules aim to safeguard the ecosystem, but anyone operating there must treat compliance as a core part of their business plans. So, a startup failure to do so can meet a hefty fine even if shut down. So, as we discussed, so while the Singapore environment has strong backing and clear guideline, which is attractive, it also expects participants to play by the rules fully.
Okay, understood, Nikhil. So, being an Indian, tax is the most important things for us. So, so how are virtual digital assets being taxed in Singapore particularly?
Hmm. So, Singapore, as of now, adopts a very relatively favorable tax regime for the VDAs. So, an Inland Revenue Authority of the Singapore (IRS) treats cryptocurrency not as a legal tender but as a property. So, therefore, there is a no capital gain tax in Singapore, meaning profits from buying and selling of the VDAs are generally not taxed unless they form a part of your business income. So for business that accept crypto as a payment or a trade, it actively the gains are treated as revenue income and are taxable under corporate income tax. IRS has also clarified that goods and services tax (GST) is not applied to DPTs used as a payment. So after a 2022 update, however, businesses must keep meticulous records of the crypto transaction to comply with tax reporting. Token swaps, staking, rewards, and uh, airdrops may also attract tax depending on the nature and purpose. Consulting a expert early is recommended, especially for the founders structuring frameworks and tokenomics.
Okay. So Nikhil, we were talking about MAS.
Hmm.
So what is MAS approach to stable coins?
So, okay, so AMS approach to stablecoin is relatively very good. So AMS finalized its stablecoin regulator framework in August 2023. And after that, the regime applies to single currency stablecoins pegged to the Singapore dollar or G10 currencies issued in Singapore above 5 million in circulation. Under these, issuers must meet capital reserve backing, redemption rights, and disclosure standards, and 100% reserve backing with the high quality liquid assets, daily reserve audits, redemption at par within 5 business days, and clear white paper and risk disclosure. So AMS aims to differentiate regulated stablecoins from other, offering consumer confidence. Notably, only AMS certified stablecoin can be marketed as AMS regulated. Okay, so this clarity benefits startups building payment rails for DeFi projects as well. Tools like SecureDApp compliance analytics can be vital, or ongoing reserve audits can smart contract integrity.
Okay. So Nikhil, are NFTs regulated under say Singapore PSA and FSMA Act?
Okay, not automatically regulated. NFTs are not automatically regulated. So MS generally treats NFT as a digital collectibles, okay, not payment
Okay.
tokens or securities. So unless their feature qualifies, then otherwise it is not directly regulated. So if instant, if a NFT represents a fractional ownership into a real world asset like real estate, promises returns or profits, is bundled with the staking or lending services, it may trigger licensing under PSA or FSMA. Therefore, functional analysis is critical. Founders launching NFT platforms should consult counsel and possibly engage with MS in advance, especially in financial utility is layered over NFTs.
Got it. So what is Singapore position on decentralized finance platform that we call DeFi and DAOs?
Okay, so DeFi platform and DAOs in Singapore has a very cautious but open stance. So MS has acknowledged that DeFi protocols can pose systematic risk particularly due to anonymous participation leverages smart contract vulnerability. While DeFi is not regulated as a category, platform facilitating public token trading or lending may fall under FSMA or PSA. So if a protocol has central development team that offers interfaces or on fees, AMS may deem it a virtual asset service provider. So decentralization in this context is not a shield. Okay, AMS is exploring embedded compliance solutions and has encouraged experiments like Project Guardian, a DeFi pilot with DBS and JP Morgan simulating tokenized bonds and foreign exchange. So DAO operating in Singapore must also comply with company registration laws and AML safety obligations. So especially they control treasury assets. The founder should review these governance token features very carefully. Okay, so they should not leave it for the government to confirm to.
Okay. So what are MAS guidelines on crypto advertising and retail promotions?
Hmm. So AMS has imposed strict regulations and limitations in January 2022. It prohibits public advertising of DPT services, especially through public transport, website influencers, or ATM. The goal is to avoid trivializing high-risk products. So licensed firms may only promote their services on their own official platform and must include clear risk disclosures. Further, promises of returns, misleading visuals, or hype-based marketing can lead to enforcement. So even DeFi frontends may fall under these rules if they onboard retail users. So this places the burden on startups to maintain educational neutral tone outreach. The SecureDApp and similar provider help by enabling risk disclosure modules and automated onboarding alerts within compliant user interfaces.
Okay. So Nikhil, one more question about MAs. So how does MAs regulate the tokenization of real world assets in Singapore?
They are actively supporting tokenized through pilots and regulatory clarity. Projects like Project Guardian have tested tokenized bond liquidity pools and repo markets on blockchain. Tokenizing RWAs like real estate invoices or commodities fall under the Securities and Futures Act, and if they represent ownership on investment contracts. So, startups like startups tokenizing RWAs should seek AMS feedback and may need a recognized markets operator or capital market services license. Sandbox Plus is recommended path, and Singapore Securitization Working Group is also studying best practices signaling future regulations.
Okay. So what consumer protection mechanism exists in Singapore and Singapore's crypto framework, I would rather say.
Okay, so in the recent years, significantly to improve investor protection, they have included cold wallet requirements, custom asset segregation and trust arrangements, ban on lending retail customer tokens, risk awareness test for onboarding retail users. So, as additionally, investors have these financial industry dispute resolution centers as well for certain disputes. Although many crypto contracts still fall outside the standard financial protection. So AMS has urged platform to maintain complaint desk and transparent refund policies as well.
Okay. So Nikhil, talking about smart contracts, how are smart contracts treated legally in Singapore?
And smart contracts are recognized as legally binding if they fulfill the basic contract formation criteria under the common law. That is offer, acceptance, intention, consideration. So AMS also encourages their use in finance and compliance automation as well. And that said, faulty or manipulated smart contracts could trigger liability. Projects must ensure that they have to secure coding, testing, and audit trails as well. And uh, Solidity Shield comes in of the SecureDApp. You can use SecureDApp Solidity Shield to automate your audit and formal verification layers, reduce the risk of legal exposure or hacks as well.
Okay, thank you for promoting SecureDApp. So, Nikhil, next question is that how should VDA startups structure themselves in Singapore?
Mm. So most startups should register as a private limited company only, okay? Because that will give you the most amount of protection from the penalties. So under the Accounting and Corporate Regulatory Authority (ACRA), this ensures legal identity and eligibility for licensing. Founders should also appoint a resident directors, maintain audited financials, open crypto-compatible bank accounts as well. So legal advisors may recommend dual entity models separating token issuance and operation or foundation and neutral jurisdiction for governance. Tax planning and compliance readiness should be embedded from the start.
Okay. So, Nikhil, that was my final question for you. So, thank you, Nikhil, for joining. And before we end the session, can you just tell us some final words from you, which would be helpful and beneficial for our audience?
So what can I say, man? Uh, mm, uh, Looking ahead of the course, there are big roles of FSMA and MSA as well. So MS will be watching closely to see how these licenses and those who don't will have to exit the foreign services market as well. Also, MS has uh, what can I say? In summary, Singapore VDA regime remains among the most dynamic in the world. Okay, so it's the most dynamic. There are every day there are updates coming in, notifications and all. The firm and investors should prepare for ongoing tightening of the ML consumer safeguard, while also leveraging the clarity of the sandbox support that AMS provides. So overall, staying compliant and engaged with the AMS guidance is the key to navigating this evolving landscape, man. Um, and best of luck to the few secured app team as well for giving me this platform.
Okay, Nikhil, thank you. Thank you so much, bro. So, with that, we just wrap up this session of SecureDApp Spotlight. This was episode 8, audience. So, two more episode left for you guys. And so, thank you, Nikhil. Thank you for joining, and thank you for watching, audience. If you like this video, please hit the like button. Share this video with your friends, families, and colleagues. Subscribe to our YouTube channel, Secured App. We will definitely see you next time for the two more videos that are upcoming. So with I think Nikhil will be joining too.
Thank you, man. I'll surely
Yeah,
join you for the
yeah.
next
So Nikhil
video.
will be there with us. So that's all. Till then, stay safe, stay secure, and as always, I say, stay ahead. Thank you, Nikhil, and
Thank you,
thank you,
thank you.
audience.